Hello everyone, welcome back to another day of trading. Simply Investing. Bobby here, trying to help you get as much information as you can and give you guys some help. Today I want to talk about another aspect of the 4 pillars of financial investment, and that is your 401k. Before I go into that, I just want to recap what I've been doing. Today was a really great day on the market. As you can see, I'm home early, just ready to go do some other stuff, enjoy this nice Florida weather, although it's like 97 degrees down here, but it's ridiculously hot. I'm floating in my home. Just turned on the air. It's ridiculous. But anyway, great day on trading. Apple up, everybody up, bounce back happened, bought on the low on Friday, came in strong on Monday. A lot of people are asking me what my picks are. I will post a link down below because, of course, there's a lot of personal information going on. You can certainly direct message me on my Facebook page, simply Community 2015, or you can email me simply investing community at gmail.com, and I will answer your questions as best as I can to the best of my abilities. I also want to give props to John. Excuse me. A little build up here. Give thanks to John with his channel going on. He's doing a great review on the Acorns. I'll post a link to his channel down there. Acorns is kind of a unique app compared to the Robinhood app. You don't get the more control that you do in the Robinhood app, but you do get an algorithm-based system that's going to help you invest, and they parcel it out and they explain. It's a very good system for someone who doesn't want to really actively trade. I think it's great, and I think it's great that he's doing a review on it. So props to you, John. Keep it up, and I like to watch him, so just because I like as much information as I can to help me become a better trader. A lot of people have asked what my positions are. I'm heavy tech right now, Apple and Fit being my number one heavy hitters in my tech industry. Micron, I'm not too sure about. Micron, yes, they have a contract with Apple, and they do make a lot of components, but we all know how Apple did, GA Technologies, the sapphire glass company, so I'd be very worried about investing in them. And of course, the buyout from China, I think has proven to not go through. I'm not sure. I really didn't pay attention to it, but I don't think it was a viable target for a buyout anyway. But with that said, it seems to be sitting at $19. It's going to be interesting to see if they can get some contracts with like Microsoft, Windows, kind of do some coordination with some of the bigger chip manufacturers. But who knows? We'll see how they pan out. I would say if you're going to invest in a chip maker, put your money in Intel. A lot better. I'd say it's in most computers other than AMD. They just seem to be a steady growth company. Not a lot there, but they're going to, as computers get more intricate and start getting into more devices that we normally didn't have, Intel's going to start making processors and components for them. So it might be time to go buy it for I think it's like $29 or $30 a share now. I think it's a decent buy, not a great buy, not something you're going to make a lot of money on, but something if you just wanted to put your money in idly and move forward. Now, I'm doing very well with Fit. Fit just seems to be skyrocketing. Haven't checked my Robinhood experiment account yet, but my personal account, today I'm obviously here. I made enough money today for most people to have a salary. But keep in mind, over the last week, I think I made $13,000 loss overall. But today I had I remember this is going to be before taxes if I do decide to withdraw it. But I think it was like around $60,000 roughly, which is great because I doubled down on Apple, Fit, and everything on Friday. When you buy Apple for close to, I think it was like $13 a share, you're going to make some money when it goes back up to $119 a share. And when you buy a few hundred of them, you're going to make a ton of money. So, with that said, that's why I'm here early, making this video. Now, I want to talk about the importance of your 401k. Now, I've talked to a lot of individuals who are working for a large companies, and they're in their mid-20s, they haven't even started putting money in their 401k. My recommendation to you is to instantly put your money into your 401k. As soon as you are eligible, put money in, because first off, if the company matches 5% and you put 5% in your paycheck in, they automatically give you 5%. You already have 100%. Now there's some companies have a term where you can't withdraw from, which most of you aren't going to withdraw so early, but you become fully vested after so many years, usually 3 or 4 or 5 years. You become fully vested, and that's when you get your full amount when you withdraw it. My thing is, especially I know people switch around jobs a lot. Let it stay in that 401k for a while. Unless if the company's hurting, stay in their 401k. When you get eligible for your next one, merge it into your new one, and just keep the flow going. Good companies to work for your 401k. Banks, obviously, a lot of banks give 5 or 6% match. Some of them even give, when you've had 10 years, 25 years or more, allow up to 10% match. I think it was not too sure on this one, but there's some small banks, PNC Bank too. But it's a good thing. Banks usually give you good 401ks, good blue chip companies. Microsoft, AT&T, Verizon, they all give great 401ks. If you work for a great company, get the 401k, because it's going to help you out in the long run. And the quicker you start, the more money you'll have in the future. And it's hard when you're 45 and you're getting into your 401k, because you're not going to get a lot of money. When you're from 35 under, great time, because you still got 30 years of work. So you're going to have 30 years of constantly investing in that 401k. By the time you're ready to retire, which will most likely be between 65 and 70, you'll have tons of money, especially since the retirement age is going to be 68 by that time, or a little bit higher, who knows. Another thing people forget is worry about when they input into a 401k is it doesn't affect your take-home pay at all, if minimal. You're talking maybe $1 or $2. A lot of people don't understand. If you put in 5%, and usually if 7%, you'll start to see the difference in your check, but 5%, you will not see the difference. So if you take home $600, you take home $800. If your check before tax is $800 and you take home $600, when you take out $50 for your 401k or whatever the 5% is, you will see that you're still going to come home with $600. Maybe a little bit more, because that's less money being taxed. Now, you do pay those taxes at the end, but you're not paying a phenomenal amount of taxes. You're paying like a 28% tax on it. You're not paying like 38 or 40% like you would earning the money. So it's good to put it away. One thing I don't like is trying to move your 401k around. Don't move it around to maximize your growth. Your 401k is just a steady investment. Whatever they have picked for you, just pick it all. Diversify the money as much as possible. Let it sit there. Yes, over down economic times, your 401k will dip. Keep investing, because now you're buying more stocks. When I was working for Radio Shack, the economy was just going down, but I kept investing in the 401k. And after 2 years, all of a sudden I went from like $4,000 up to $50,000. But then after a while I cashed out and I started becoming a personal trainer, just trading for myself, which seems to be a lot better. I enjoy it a lot better, but that's another story. Your 401k is very important. And it's very important for the fact that you can generate vast amounts of, I wouldn't say vast, but like phenomenally more wealth than what you normally would generate working. And you're going to be working at the same time. It's just like, splitting yourself in half and having half of you go over there and half of your other half going over here, but they're both getting paid $15 an hour. So instead of you just making $15 an hour, now both your halves are making $15 an hour. Now you're making $30 an hour. That's just kind of like how I want people to view your 401k. It's very important to get in there and start your 401k as soon as possible. Now, which a lot of people succumb to, is borrowing against your 401k. Borrowing against your 401k it's okay if it's an emergency. kid breaks a leg, you need braces, wasn't planning on it, things of that nature. Your car breaks down, $5,000, stuff you don't foresee. That's fine. Once a time. But make sure you're on an aggressive payback plan so you can pay that sucker back by the end of next year. Or even before it. You want to put your money back in the 401k. You don't want to borrow against it, because when you close it out, you have to pay for the taxes and the 10% early fee and all that fun stuff. I highly recommend not doing it. Just don't do it. But with that said, I mean, people are free up to do your decisions. I just don't recommend borrowing against it. It just puts you in a lot of trouble when you do, because a lot of people tend to forget to pay them back. So with that said, your 401k is your best way to go, as far as if you one of your best passive ways to go, because to me it's 100% guaranteed growth. Because if you put in $100,000 over your lifetime, your employer would have matched $100,000. So you made $100,000 by just giving your money into a fund. I know people have a lot of questions about this, and I will answer them in detail with each one. But I just wanted to create a video to emphasize how important it is to get into your 401k as quickly as possible, and how it will benefit you down the road. And being one of your strong pillars of investment, it's going to help you out. It's just, there's no way a 401k is not going to help you out. I mean, there was Enron, and there's problems, but don't invest a bulk of your 401k within your company. Invest it outside in heavy index funds, lots of mutual funds, and just put it in there. Just down the line, as if there's 20 mutual funds you like, 5% in each, so that way it all gets covered. That's the best advice I can give you with your 401k. I would do, if you're going to buy company stock, maybe you work for Procter & Gamble or GM, only put 5% of your 401k into your employee stock. Let the rest go into mutual funds and be as diversified as possible. But I do want to say your 401k is not your I'm going to retire rich. No, your 401k is for steady growth, and it's your secure asset towards your future. So that way I have my 401k and I have my Social Security, so you're going to be pretty good. A lot of people don't really take that into account, but you're going to be pretty good when you have your 401k and your Social Security. And your 401k is supposed to be another strong pillar for you. One last thing before I close out this segment of the video, I really, really don't recommend withdrawing from the 401k to invest in anything that someone offers you. If you got the cash to invest, great, here you go. Someone says, hey, invest $50,000 into my company, I will return $100,000. Hey, you can invest your $50,000 cash, but don't ever touch your 401k. Don't drain it for someone saying, I can give you 20% return. Your 401k is not meant for 20% return. Your 401k is meant for 1.2% returns every year, consistently, and grow. That's the idea of it. That's all it is. It's not meant to do 10%. It's not meant to do 15%. It's not meant to get you rich. It's meant to help you be stable. It's meant for you to say, when the time comes that I don't have to work, I have this set aside in addition to my Social Security. That's why it's important. Don't risk your 401k like that. Just deposit into it and forget about it. Just completely forget about it. Just completely ignore it. Don't even bother with it. It hurts me when I see people that say, I withdrew $180,000, or I nearly drained my 401k and it turned out to be an investment fraud and now I have nothing. Social Security only gives you $32,000 a year at the most, unless if they increase it for inflation down the road, which they probably will in the next 30 years. But right now, it's only $32,000 a year. I don't know, as I know there's a lot of politicians that say, well, that's And there's a lot of things going around, but $32,000 a year is not a lot. That's working full time for $15 an hour. No overtime. That's $15 an hour for 40 hours a week. And that's not a lot of money to live off. Because remember, Social Security will be taxed too. Not as much, but it will still be taxed. So you're only looking at like $1,600 a month. Can you afford to live just off of $1,600 a month? My suggestion for a lot of people is leave your 401k alone, leave your Roth IRA alone, leave your personal portfolio alone. The only money you should invest in someone that says I can give you 20% gains is whatever cash you have in your pocket. If it's $1,000 and it doesn't come back, you're not going to be that upset. You'll be upset, but you won't be like, my life is over. You'll be like, well, it's $1,000. I'll work harder. I'll pay attention and not mind those things anymore. Or even if someone's coming over from another firm, don't invest all your eggs in that one firm. Say, okay, well, you want to manage my money? Okay, fine. I'll break you off a little square, and here you go. If you have $300,000 and it's with Charles Schwab, and someone else says, well, I can manage your money better. Well, okay, here's $50,000. See what you can do with it. Because at the end of the day, if he loses all $50,000, you still got your $250,000. And don't ever take your 401k out and give it to someone that says, I can invest it for you tenfold. Absolutely not. Absolutely. The worst idea you could do ever is give that to someone. Your 401k is your life. Is something that's going to help you live for next 10 years without having to go back to the workforce. I would not advise giving it up. I just leave it alone, let it sit there, don't pay attention to it, just invest and just make sure you read the statements, seeing where it's going. That's all. Side note, if you ever think you have an investment scheme, do the due diligence and call. Look up. A lot of these companies that these investment frauds say, like I had one guy, he said he worked for Bank of America. Call Bank of America. Hey, did so-and-so work for you? Did John Smith work for you during this time, in this position, in this capacity? And you also got to be careful because a lot of good investment scams start out in truth. There is a layer of truth there, which 90% of people will stop and say, okay, well, he was truthful. He did work there. A lot of people just say, well, did John Smith work for you? Employers only obligated to say, yes. If they did, yes, that person worked for us. Oh, and most people say, oh, okay, he must be telling the truth. No, ask deeper. Why was he let go? Can you divulge that information? Does he still work there? What capacity did he work for you? Was he a teller, private banker, hedge fund manager? What capacity did he function for this financial institution? Or whatever place that they said they were affiliated with. If they say they got a master's in finance from Stanford University, call Stanford University and say, hey, does such and such have a master's? It takes a couple seconds to do a little fact checking. That fact checking could save you hundreds of thousands of dollars and cost you a lot, and save you from a lot of grief. Wrong term there, but save you from a lot of grief. And I really hope someone sees this and does the due diligence and they save themselves some grief and money. And I hope that happens, because that's really one less person discrediting the whole financial institution. There are a lot of bad guys out there, but there are also a lot of good guys out there who are willing to help you. And I would like to see those good guys get the recognition that they deserve. And they can't if the average consumer is constantly being flooded with scams saying, well, guaranteed 20%. Second side note, any investment that says guaranteed, don't invest. Like, if it's guaranteed results, why wouldn't the top billionaires be there? Just question yourself like that. If this is such a guaranteed hush-hush, how come your clients aren't Warren Buffett, Bill Gates? Yeah, even forget the guys who did a business. What about Warren Buffett? I mean, one of the world's best investors, and he's not investing in you. There's a reason why, because it's probably a scam. So with that said, I hope you guys have good luck trading. August seems to be working well for me with my Robinhood app. I seem to be up right around 15%. I'm going to have to do the numbers to see. Good luck with trading. Do day trading at your own risk. Keep in mind, when you day trade, you got to keep in mind your personal level of risk. If the risk is too high and you are not comfortable, stop trading, close your laptop, turn off your phone, go watch some TV. Done. Because when you get in that situation, you're going to want to start fighting back. And when you fight back, the market's going to bang you on top of the head and you're going to lose more. If you guys have questions, feel free to email me at simplyinvestingcommunity@gmail.com. I will leave the email in the description. Like and subscribe. Keep commenting. Keep subscribing. Keep emailing me. Visit my Facebook page. Keep commenting and share your information as much as you can with not only with me but with other people who are interested in trying to trade and trying to better their financial education. That, guys, thanks. Have a wonderful week. I may be back later today with a day trading video. Not positive. I do have to get some rest and hop on those foreign markets. So with that said, good night. Good luck. Like and subscribe.